I think with respect to oil prices, I think the bias is for lower oil prices. Saudi Arabia, the recent death of the king, I don't think it's going to change Saudi Arabia's policy with respect to oil prices. I still think they're likely to keep the taps open. The fact of the matter is, I think that they are now starting to see some evidence that their policy of keeping the production levels constant is now starting to have an effect. We're seeing a number of US oil field services providers, Halliburton and Baker Hughes, announce job cuts and rig count reductions, and that suggests to me that the US shale producers are starting to feel the effects of a lower oil price. We also saw a couple of months ago WBH Energy, a US shale producer, file for bankruptcy. So I think it's unlikely that the Saudis are going to compromise on their current production levels. And as such, unless demand picks up, I think the bias remains for a lower oil price, unless we can actually sustain a foothold above $50 a barrel. And at the moment, that doesn't seem probable. Expectations from the Fed, I'm not expecting any significant change. I think the Fed will reinforce the message that they're going to be patient when it comes to the path of rate increases. I think there is a concern, I think more broadly, that the disinflationary effects that we're seeing not only in China but in Europe and the UK are starting to manifest themselves in the US, certainly in the context of wage inflation. And I think what I would be looking for from the FOMC statement is, if there is any reference to concerns about the path of inflation, that would suggest to me that any possibility of a rate hike is going to get pushed further out.